This hourly segment is sponsored by Financial Planning with Jack Taboda, your 401k specialist. Heard Saturday mornings at 7 right here on AM 560, The Answer.
You want more than just the headlines? Find out what's going on and what it means with me, Dennis Prager, this morning at 11, right here on AM 560, The Answer.
Good morning, Dan. And in for Amy this morning, Kristen McQuarrie, she of the Chicago Tribune editorial board. And Kristen, we got some bad news out of Gobbler's Knob. By the way, wasn't that the name of a Stormy Daniels film? Or do I have that wrong?
I think it was your high school band.
Gobbler's Knob, Puxatawny Phil saw Shadow, so 6 more weeks of winter.
So disappointed in him.
Yeah.
I'm revoking his Screen Actor Guild Union membership.
By the way, Dick Blumenthal, I had to pick this up from Mike Scott's newscast.
Yeah.
Did you hear that? Vietnam War hero, Dick Blumenthal, according to him. He said, Devin Nunez, we can make a case out for obstruction of justice. He's an officer of the court, allegedly. He was the Attorney General of Connecticut.
Just release the memo already. Just release the memo. Let's put all of this hyperbolic conversation to rest. Release the memo.
Or we could just have the FBI conduct a coup d'etat and throw all the Republicans in prison. Why don't we just skip ahead? Get to where Adam Schiff and Dick Blumenthal want to go. All right, the good news amid all of this silliness. January jobs, 200,000 jobs in January. Unemployment rate remain unchanged, 4.1%, a meaningless number. But 200,000 new jobs, that's above the replacement number you got to hit just to kind of keep pace with the population growth and attrition and so forth. 200,000 jobs in January. Good sign for the start of the year, isn't it? We put that question to our friend Scott Shellady. Scott the Cow Guy, Fox Business contributor. There he is. Scott, thanks for joining us. Appreciate it.
Good morning.
Morning. So are you, and you're not like a rosy optimist by disposition. Are you excited about the January jobs numbers?
Yeah, things are looking better, Dan.
You
the biggest
sound
number
excited.
in this pack.
Yeah, be a little bit more excited.
Well, all right, I tell you, I'll reread the news with a much lighter tone. How about this? The biggest numbers in here are the average hourly earnings. They're hot. We had 2.9% year over year, which is the most since 2009. That's a decent number, a really good number, actually. That's going to cause interest rates to tick up a little higher. And for all the newbies out there that are new to the market and probably bought these equities at much too higher prices anyway, that's going to cause the equities market to sell off here, even though we've got a very good jobs number across the board. So the revisions are higher. The hourly earnings are starting to move higher. We've been always worried about that because we had this 4.1% unemployment rate, and we weren't seeing the wages bump. But now that's starting to come through. So this is a very good report. This is a very strong, solid report.
Do you think does Trump deserve credit? During his State of the Union address, he mentioned the lowest black unemployment rate since we've been keeping track of those numbers. And some analysts are saying, he does. Those numbers were falling even before he took office. Does he deserve credit for that?
Well, you have to take credit anytime you can, because if things were going badly, he'd be blamed, right? Mm-hmm. So if I'm going to have to take the blame when it's bad, I'm going to definitely try to take the credit when it's good, and I think that's what he's doing. Presidents generally, or almost always, would steer away from putting their name on the stock market. He hasn't had that issue at all. He's been putting his name all over the stock market, so now he's going to have to live and die by that sword. However, don't necessarily have that much to do with the markets and what their policies are. But this time is different. I really do believe that, and we can see that in how he got elected. We can see that in what happened with Brexit over in Europe. This time around is unprecedented, and we've seen such a fundamental change in sentiment that I haven't seen in a long time. It was only 18 months ago that we were mired in this low growth, low inflation, what are we going to do to get out of this molasses in January type issue. And he's been able to make some CEOs feel a little bit more rosier about the future. And I think that's got a lot to do with what these numbers are saying.
Right. It's a bit of an attitude readjustment. And then that attitude readjustment was reinforced by restraining government from regulating more and cutting taxes and encouraging repatriation of capital here. And so, it sort of builds on itself, it seems.
Yeah, and you know what, Dan, I've got an agricultural background and grew up on a farm, and I would only say that he's just brought common sense back into vogue.
Yeah.
I mean, there were times over the last 8 years with the last administration you think, how are they coming to this conclusion, and why are they doing what they're doing? And finally, we've got a guy that says, hey, how about lower taxes? Hey, how about a big infrastructure spending plan? And hey, how about less regulation? And boom, you get 2.9% year-over-year growth in wages, largest since 2009. Those things are related.
So here's another question, and I'm asking you a loaded question, but
Fine.
there's been one thing that Trump didn't mention during his State of the Union speech was spending and reducing the size of government. And of course, we love the tax cut, but it's going to add $1 trillion to the federal debt over 10 years. Do the markets really not Dan is whining over here. Do the markets really not care? Are we moving into a direction where spending hawks and fiscal hawks are just we're not going to be talking about entitlement reform or the federal debt because the markets don't care?
They care a little bit, probably not like they used to, number one. And number two is that they're all going to cling to the Art Laffer theory that, once we do these things to the economy, hopefully it grows enough to pay for the money that we're spending. And I think that that's what everybody's going to kind of cling to on this, because it is so big and the changes are so massive that we better start to see the economy grow. And so far, I mean, look, the Atlanta Fed raised their expectations to 5.4% for GDP.
Yeah.
So, Art Laffer could be right on this one. He's been bullish this whole time, and he really believes that these tax cuts are going to be what really spurs on the economy. And if you get the economy to do what he thinks it's going to do, a lot of those things do get paid for.
So, at this point, though, where do you see? We see some rosy numbers for GDP growth, but is this the point where we there's going to be a pullback in the market, and I move all my offshore cash into Bitcoin or Elon Musk's pneumatic tubes or something?
Let's look at it with a little bit more rosier outlook, Dan. Let's just say that those that miss the move might have a chance to get in. How about that? That's what we can say. Because you're going to see rates rise, and that's going to start to compete with the stock market, right? We just had the 10-year Treasury yield go through 2.8% here this morning. And that's the velocity from 2.5 to 2.8 has been very, very quick, and that's going to cause some folks, a little concern. So there is money moving out of the equity market towards treasuries, putting them in bonds. There's going to be people taking some off the top here, and as we get more and more of this good news and more of this inflation sneaking into these reports, that's going to kind of put a top on equities in the short term. But man, look what just happened with the tech sector and the earnings that they had yesterday with Google and Amazon blowing the doors off things. So the economy's still doing well. We're just going to the equity market.
So let me ask you this question about the axis of evil, Bezos, Buffett, and Diamond. I'm kidding, not really, but they certainly were earlier in this week. The Berkshire Hathaway, J.P. Morgan, Amazon healthcare play. Obviously, that was not received well in the market with respect to healthcare companies, health insurance companies. How do you interpret what could be going on there and what impact those three could have on whatever it is they're scheming up?
Well, it's definitely going to hurt pharmacies. It's definitely going to hurt insurers. When that news broke, the insurers finished the day down 2.5% to 6%, and all the pharmacies were down about 5%. Rite Aid, Walgreens, and CVS. So, and the healthcare market is 20% of the economy. So there's going to be, that was the market's first wobble, because that is going to be great for us at the end, but it's going to hurt those companies in the middle, and that's part of the first moves we had with people taking some money off the table. But
Bezos and Amazon, he wants to get into pharmaceuticals.
Yeah, exactly right. But number one, but number two, let's remember what he did to the retail sector. It's not Amazon; we call it Amazapped, right? The retail sector was Amazapped, and now the healthcare sector is going to get Amazapped. So that's pretty much, when we boil it down, that's all you got.
So Scott, here's a broader question. But with all the Russian probe and the memo news swirling, which I know that's not necessarily your area of expertise, but does the market react, and has it over time, to the ongoing Russia probe?
No, absolutely not. And I think if the markets, the guys in the markets have known that Russia has tried to meddle for the last 40 years. It's nothing new. It's just an excuse. The markets care about lower taxes, less regulation, and infrastructure spending. And those things are starting to come to fruition, and the market's taking notice. And that's why you've seen these things come in a little hotter than expected, so that means inflation's on the rise, and that means the stock market's going to kind of take a little bit off the top here and reevaluate, but it's not bad for the economy at all.
Just picking up on that theme of how public policy can impact the markets, in these the immigration reform debates, particularly here, like in Chicago, you often get the business community, kind of the fat cat business community, to weigh in on the side of the left and essentially finding pathways to citizenship for people here illegally, more liberal laws on sanctuary, maybe not so far as sanctuary laws, but certainly things like driver's licenses or health insurance, things like that. They weigh in on behalf of immigrants because of the labor pool. Is immigration, any deal on DACA plus border security, is that something that has, or the lack of a deal, is that something that has the potential to be impactful?
No, not really. I mean, NAFTA would be much more impactful than that, or some sort of policy measure that has something to do with the economy. I mean, you've got the left that wants illegals for the votes and the right that wants illegals for the work, right? I mean, they both want them. And I don't think that either one will win that case. I think that kind of cancels each other out, and the market's the market because of the three things I mentioned. It's really fundamentally coming down to the fact that we haven't had inflation, even though we've had such a low unemployment rate, and we're now starting to see those wages rise and inflation sneak back in. And that's going to make a difference to the overall economy. And these things are fantastic. Look at the earnings. I mean, the earnings are still great. So the economy looks good. The stock market definitely will come off from this, and that's a good thing, too, because you can't have everything go up forever without being healthy. So all in all, I think this is a fantastically solid report. It's a good base to build off of.
One more public policy, more directly the economic realm, trade policy. You just kind of referenced it, and the Trump tariffs on solar panels and washing machines, and potentially the renegotiation of trade deals like NAFTA, and where trade policy goes, the more perhaps in a more protectionist direction.
Yeah, well, you know what? The markets are 6 months out, right? So the stock market is a voting tool for 6 months from today. So it's trying to stay ahead, and I think that that's already digested anything that might come out of NAFTA or anything that might come out of any sort of tariffs or what's happened with China and the solar panels and the like. So I don't think that's affecting the markets at all here. The most important thing is, do we see inflation and do we see growth? And if those things are yes, and they are so far, the stock market's going to be the headline and not the trade deals or any tariffs.
He is Scott Shellady, Fox Business contributor. Scott, the cow guy. Scott, thanks as always for joining us. Appreciate it.
All right. See you later. Have a great weekend.
You too. And he joined us on Turnkey.Pro Answer Line.
Hear about the big stories of the day, then talk about them right here on Chicago's Morning Answer on AM 560. The Answer.